Hey everyone, welcome to another episode of Investing Kev. In today's episode, we're going to take a trip into the travel industry and take a look at Trip.com, ticker TCOM. Traveling is a massive industry, so we'll take a look at their company overview, their financials, their outlook, their risk factors, their price target, and I'll wrap it up with my final thoughts. For full disclosure, I'm not a financial advisor. This is for entertainment purposes only, so always do your due diligence and speak with a professional. And I currently do not own any shares of Trip.com. If you want to follow along with my investing journey, I am investing in four common investing strategies. I am invested in a portfolio that tracks the S&P 500, another one focuses on growth stocks, one focuses on dividends, and one is a mix of both growth and dividends. If you like my content, please give me a thumbs up, subscribe, and let me know in the comments what you think. This channel is growing and my goal for 2022 is to reach 1,000 subscribers. With all that being said, let's get started. Looking at their company profile, Trip.com is a leading one-stop travel platform globally, integrating a comprehensive suite of travel products and services and differentiated travel content. It is a go-to destination for travelers in China and increasingly for travelers around the world to explore travel and get inspired, to make informed and cost-effective travel bookings, and to enjoy hassle-free, on-the-go support and shared travel experience. Founded in 1999 and listed on the Nasdaq in 2003, the company currently operates under a portfolio of brands including Ctrip, Qunar, Trip.com, and Skyscanner. This is currently the landing page of Ctrip.com, this is the landing page of Qunar.com, and this is the landing page of Skyscanner.com. Trip.com is like any other travel website. You can book your hotel, you can book your flight, you can book your rail tickets, you can rent a car, you can look for tours and tickets. They have an attractions section where you can look at popular destinations such as Manila, Bangkok, Hong Kong, Shanghai, Singapore, Dubai, Taipei, and they have a Trip.com rewards program. You can earn these coins from booking flights, booking hotels, writing hotel reviews, booking with the app, post-trip moments, writing attraction reviews, and you can redeem these coins to save instantly on bookings. Looking at their financials, from 2016 to 2019, they went from 19.2 billion renminbi to 35.6 billion renminbi, which is a 85% increase during that span. In 2020, they still brought in 18.3 billion renminbi, which is about 2.8 billion US dollars. Though of course COVID happened and that heavily hit the sector. What's most important to me is that their revenues were trending up. Their gross profits were in the 20 billion renminbi range from 2017 to 2019. Although their total operating expenses went up every year from 2016 to 2019, if you look at the bottom for net loss and income, you can see that they were profitable starting in 2017. It was holding strong for 3 years until the pandemic happened. In 2020, they had a net loss of 3.2 billion renminbi, which is about $500 million. Looking at their balance sheets, their total assets have always been more than their total liabilities. In 2020, even with the pandemic, they had 187.2 billion renminbi, which is a 28.6 billion US dollar total assets. Their total liabilities were 85.6 billion renminbi, which is 13.1 billion US dollars. I want to take a look at their key highlights for the third quarter of 2021. Their total net revenue was stable year over year and decreased by 9% quarter over quarter. This was mainly due to natural disasters and new rounds of COVID-19 infections. Staycation continues to serve as a major driver of domestic travel recovery in China, with intra-province hotel reservations growing approximately 35% and local hotel reservations growing over 60%. This is compared to the pre-COVID-19 period in 2019. International flight reservations grew approximately 40% quarter over quarter. This was mainly driven by the recovery of the European and US markets, and revenues from corporate travel management grew 20% year over year and 1% compared to the pre-COVID period in 2019. The executive chairman had to say this: "We will continue to adopt a dual circulation strategy to focus on both the China domestic and global travel markets, to keenly seize any opportunity amidst fast-changing market conditions." In the beginning of the third quarter of 2021, the company continued to experience steady recovery of both domestic and overseas business. However, in August and September 2021, a few waves of COVID-19 infections reemerged in certain regions of China. This restrained users' demand for the company products and materially and adversely affected the overall results of operations for the third quarter of 2021. In the third quarter, they reported net revenues of 5.3 billion renminbi, which is 831 US dollars. This represents a 2% decrease from the same period in 2020. And like we saw before, the net revenues for the third quarter of 2021 decreased by 9% from the previous quarter. Again, this is primarily due to the reemergence of COVID-19 infections in certain regions in China. Looking at their outlook, the outlook of Trip.com is going to be years out from now. What I like about the future of Trip.com is the future of the growth of the Chinese travel market. And this article from MarketWatch came out last week. This article talks about the China outbound tourism market. It says the China outbound tourism market is to reveal momentous growth by 2026, and the market's growth momentum will accelerate at a compound annual growth rate of 32% during the forecast period. And this article from Reuters back in November says that Asia tourism reopens with big spending Chinese stuck at home. It says China, previously the world's largest outbound tourism market, is keeping international air capacity at just 2% of pre-pandemic levels and has yet to relax tight travel restrictions. This is because they're sticking with their zero COVID policy. This has left a 255 billion annual spending hole in the global tourism market. And this is from the Chinese government. China unveils 5-year plan to advance civil aviation development. By the end of 2025, China will have over 270 civil transport airports, which will handle 17 million takeoffs and landings a year. This is according to the plan released by the Civil Aviation Administration of China. The civil aviation sector will handle 930 million passenger trips by 2025. According to the plan, countries and regions linked to China via flight routes will exceed 70 by 2025. More than 50 of these countries will be partners under the Belt and Road Initiative. And this article from Reuters also says for the 2021 to 2022 period, China will consolidate its effort in COVID-19 control and prevention, as well as focusing on reforms and specifying more support measures so that development momentum could be unlocked later. The period from 2023 to 2025 is a period of growth, said the CAAC. The focus is to expand the domestic market, restore the international market, release the impact from reforms, and improve the level of opening up. And looking at this article from Business Wire, the domestic tourism market size was valued at $1.2 trillion in 2020 and is estimated to reach $6.7 trillion by 2030. It is going to register a compound annual growth rate of 13.4% from 2021 to 2030. The domestic tourism industry has helped to mitigate the impact of COVID-19 at least to a certain extent. Governments around the world have taken strategic measures to rebuild and revitalize the industry while protecting jobs and businesses. In addition, many countries are developing measures to create a more sustainable tourism economy. And this article just came out from CNBC. Travel is roaring back, but the industry might not be ready for a boom. Travel in 2022 will be even busier than before the pandemic, said Brandon Berkson, the founder of New York-based travel company Hotels Above Par. People want to make up for lost time. They also say that the demand for upcoming travel is extraordinary. Time will tell, but I personally believe that we have to wait about a few years out for this. When looking at risk factors, government plays a huge role. It really depends on how you see the world dealing with COVID. Some governments have done everything to keep COVID as low as possible. Others have given up or not even tried at all in trying to contain COVID, and that's really affecting individuals and businesses. Borders around the world are closed to certain travelers from certain countries, and that results in less bookings for airfare, hotels, railway, tours, and many more. I don't know when the next variant is coming, where it's coming from, how long it will last. Will 2022 be the year that COVID finally becomes endemic? I can't tell the future, and that uncertainty will impact shareholders. Right now, there's so much uncertainty with vaccine inequality and people not wanting to mask or get tested or vaccinated that it's just really up in the air. I personally don't think COVID will be contained by the end of 2022. I'm not a scientist, just what I read and what I see around the world with certain countries and their lack of trying. I don't think the travel industry will recover until 2 to 3 years from now. The next risk factor is their brand name and recognition. In my opinion, this plays a huge role in dealing with competition. I went to look at the reviews for Trip.com and their reviews are really unfavorable. Trip.com has a consumer rating of 1.21 stars from 352 reviews. This indicates that most customers are generally dissatisfied with their purchases. And looking at Skyscanner's reviews, they have a consumer rating of 1.6 stars. I also looked at Booking.com and also saw that they had a 1.6 star review. I think with the competitiveness out there, with so many traveling websites and apps out there, once you lose a customer for poor service or experience, I think it's really hard to get them back. Looking at their 12-month price target from TipRanks, 7 analysts have given their price target with an average of $34.57. This would be a 37.1% increase from its current price of $25.21. The highest price target is $43 and the lowest is $29. When looking at CNN, we have 31 analysts with a median of $32.10, which is a 27.3% upside from its current price. The highest price target is $44 and the lowest is $21.26. When looking at their stock chart year to date, this stock has stayed pretty steady, only gaining less than 0.3%. When we look at their past year, they've lost $8.50, which is a 25.2% decrease. Back in mid-March, the stock price was at $44.60. From mid-March to now, it's lost over $19.40, which is a 43.4% decrease. Overall, in my personal opinion, I like traveling, but as someone looking to invest in the travel industry, it's very volatile and there's too much uncertainty. I like the future of travel as the middle classes around the world are increasing in their respective countries. That results in more disposable income to travel with. Traveling is a lot easier and more accessible than it was even 5 to 10 years ago, and it's only going to grow more. Trip.com will benefit in a few years as tourism rebounds, and right now the world's biggest travel market, China, is focused on their zero COVID policy. They say 2022 will just be like 2021 in managing COVID domestically. I don't expect their tourism to pick up drastically until 2023. Hopefully by then the world will be in a better spot in regards to how we handle COVID. If you're looking for a deep value play and are willing to stomach even more drops, travel industry will definitely test your patience but may pay off years from now. If you like this video, please give it a thumbs up, please subscribe and let me know in the comments what you think. Are you invested in the travel industry? Let me know. What are your predictions or opinions on the future of the travel industry? Thank you everyone for tuning in once again. As always, stay safe and I will see you all next time.